Over the weekend, OPEC Plus met on a virtual conference, and it's agreed to stick to its oil output targets as the oil markets struggle to assess the impact of a slowing Chinese economy on demand. And that news that a G7 price cap on Russian oil supply coming through, the EU agreeing to a $60 level. OPEC Plus, which comprises the OPEC nations and its allies, including Russia, angered the United States and other Western nations back in October when it agreed to cut output by 2 million barrels per day, which supported the price, about 2% of world demand, from November until the end of 2023. Now, this decision from OPEC Plus came 2 days after the G7 agreed a price cap on Russian oil of $60 per barrel. Meanwhile, the Baker Hughes rig count out late on Friday in the US remained unchanged at 784 on Friday, 38% above the same levels this time last year. So you can see the extra amount of oil that's coming through in the market as a result of that. Drilling rigs targeting crude oil and natural gas both stayed flat for the week at 627 and 155 respectively, while 2 rigs remain classified as miscellaneous. Let's take a look at what's happening with the price of Brent. In the wake of that meeting over the weekend, you can see not really much move at 86.06 for the price of Brent. Same sort of price action for WTI. So despite the fact there has been a news flow over the weekend, you can see that oil not really much moved in the last few days of trade.